Good morning, good afternoon, good evening, wherever you are in the world. You are watching Technical Analysis Episode 3, presented by none other than Signature FX. My name is yours truly, Padias Grove, and I'm going to be providing you with this analysis on this beautiful Thanksgiving Thursday. Time is 10:50 a.m. in Bermuda on the 23rd of November. Please remember that all information that's provided is not financial advice and is my opinion and my thoughts. Please seek your own financial advice. Jam-packed show for you today. Before we kick off, make sure you follow us on social media, Signature FX on Facebook and Free Forex Signals -SFX on Facebook as well. Instagram is signature.fx and Twitter is @signatureFX. I'd like to start off with a quote, and the quote for today is, "The fact that people will be full of greed, fear, and folly is predictable. The sequence is not predictable." And that's by none other than Mr. Warren Buffett himself. We're going to look at a few things today. US dollar, first and foremost, in the limelight, because today's analysis is all about gold. And what is gold paired up against? Generally, more times than not, it's paired against the US dollar. So if we get an idea of where the US dollar is going, we can get an idea of where gold may be going. Even if gold stays the same, if the US dollar depreciates and goes down, that means that gold against the US dollar will intrinsically increase. If this is confusing in any way, please don't be alarmed and don't be ashamed. We will be providing a lot more by way of training books, more technical analysis breakdowns, and more explanation of technical terms. This video is just to give you a quick analysis based on the way I see gold as of today, and we will be providing further information in the future for those of you who have very limited experience when it comes to the jargon, the wording, and the analysis. Please don't be alarmed, okay? But follow along. Please feel free to follow along. I'm sure a lot will make sense, but if anything doesn't make sense, please feel free to comment, and rest assured we will be providing more by way of explanation in our upcoming videos. So, US dollar looks like it's continuing this downward trend. There's been a lot of talk in the markets, a lot of chatter with people saying, well, if it goes back up to 95, we could see a break higher. Also, if it breaks this 91 handle here, then we could see a break lower. So this is a monthly chart just showing you where gold has come since 2017. Essentially, we've seen a nice downward move. There was a little bit of 2 months of consolidation, I think realization of profits. But if we go into a weekly chart, we can see how strong that downward move has been, and it looks like the downward move is continuing back up for the last 2 months into this, last 2 weeks into this week. A lot of traders were looking at this as a head and shoulders. So this would have been the left shoulder, this would have been the head of the inverse head and shoulders, and this would have been the right shoulder of the inverse head and shoulders. And this would have been the neckline here if you're going off of where the neckline would have been. So we would have got a break higher of the neckline, and then looks like we're getting a break back lower of the neckline. If we see a downward day today, I would foresee that we're going to probably want to test these 91 lows again, which would open up a nice buying opportunity for gold. And that's the reason why we're looking at this chart. Looks like the bears are starting to take back over in this US dollar trade. So looks like essentially from this highlight here, this is showing us that there was a decrease in short positions and an increase in long positions. Okay, and so the net position is 181, which is essentially near that 1-year high. The 3-year average is 113. Okay, all right. Just gives us an idea of what's been happening outside of the chart. This is the chart here, and you can see from back in the 1970s up to the 1990s, 2000s, we were sitting nicely around this. Was this around 300 level? Then we got a nice rally in gold. The all-time high of gold has been whopping 1896. Then we got a nice sharp pullback down here to what would have been around 1,000 per ounce, and then we're right here in this level here. So anybody that follows Elliott Wave would know that the first wave is the up wave, second wave is the inverse, so the down wave, and then the third wave looks like we're entering or are in the third wave now. Commitment of traders is good, but also providing the what we call the gold fixing. So gold fixing for the US dollar, as you can see, has been around from October, around 1280, 1270s, hovered around between 1270 and 1280s until recently. So this morning we had a gold fixing of 1290, and that looks like it's the first time it's been 1290 since the 12th of October, 13th of October. So good sign, just showing you what the fixings are doing as well, because this gives you an indication of what the fixes have been over the past few days. All right, let's get into a chart of gold, since this technical analysis episode 3 is all about gold. We did a Fibonacci for the bears from the all-time highs down to the lows of 2015. So you can see we're sitting above this 23.6 Fibonacci level here. This is a monthly chart. So what we're looking at is entering a buy order in gold and then setting a second buy order slightly lower, and then setting our stop loss slightly lower. So first order of business is the first buy order, which we're going to zoom in and try and prepare for. The second order is another buy order, which we're going to put lower, so that if the price does drop lower, we're getting in at a cheaper price, almost like buying on Black Friday. And then the third order will be a stop loss order. And where do we want to get out? We think this 50% level at 1480, between 1480 and 1500, is a nice target to get out of this long trade, especially if we see this as the first wave, second wave, third wave. This 50 level, I think, is very realistic in terms of where we see gold heading in the next few months. This is a Fibonacci, monthly Fibonacci for the bears. So we started from the lows in the October 2015. Now we want to look to get in at as low as possible. Okay, so you can see the 23.6 level is the first, I would say the first place or the highest place you could buy other than the 0 level. Then you got the 38.2, 50, 61.8, 78.6. All right, let's get a little closer and see what we can figure out. Okay, so this is this week. This week we're a little soft on the week. However, it's a great buying opportunity. This would have been the lows here, kind of carved out a nice low over the last five weeks or so. Okay, on the daily charts now, this is what we really want to look at. We want to try and get in before we break this 23.6, and in our follow-up videos we're going to show what happens after this and where we are, either here in the 1300s or back down in the 1270s and 60s. But in order to get a solid read on where to buy, we're going to go to the H4. Alright, so if we have a look at the charts here, current price is at 1290. We want to try and find where we had a resistance level going back as far as possible. Okay, so we'll do a horizontal line and we'll put it precisely on the top of this wick. Okay, alright, so this level is 1287.07. And why do we put it there? You can see here it was resistance and the price went down. This was resistance again, and the price went down quite considerably. This was a resistance again, and the price got shot down again. Then we got a nice breakthrough, and then it broke right back down. So this level seems to be a very reliable level for a buy. So our first buy is going to be at 1287. Okay, now let's say that price breaks lower, we get our entrance. How much do we put in? We're gonna actually purchase 1% of our total portfolio balance. So 1% of our account is going to be purchased at 1287. We're going to put a second buy order where we think there is support. Okay, so if we put that right there, there we go. You can see from here on, this has been support. This level is 1275. It's been support there. It broke below and shot up very high. This has been support here, and it's been support here. So we're going to do a different color so we can see exactly which colors are which. Okay, so our first buy is going to be 1287 for 1% of our account. Our second buy is going to be 1275 for 1% of our account. So we're going to average out in between here at about, let's call it 1280. Okay, just about 1280. Yeah, just about 1280, just over 1280 as our average in buy for 2% of our account. Our first entrance is 1% of our account at 1287. Our second entrance is 1%, another 1% of our account at 1275. And our stop loss will be 2% of our account at the 1265 level. Okay, and what we're going to do is we'll place those trades as limit orders, and we will follow these trades. We'll be posting subsequent videos in the coming weeks and months, so you can see where we got in, where we got out. We do want to remind you to follow us on social media. We have a presence on Facebook, Signature FX. We have a presence on Instagram, signature.fx. We have a signal system that we provide for free on Facebook, which is free Forex signals-sfx, and we also have a Twitter account at Signature FX. Please make sure to follow us, like us, provide feedback and comments. Upcoming projects, just briefly, we do have a training book that we're working on that's in the pipeline, and that's going to be released in the coming months. It's going to be something that is all-encompassing, where you would receive the book and it would provide you with a chapter by chapter breakdown of analysis and ways to read the markets. So more to come from that perspective. We also have a podcast that we're working on that will be coming out soon. There's also going to be a newsletter that will be released, and more information on this will be forthcoming. We're just working on the fine details of this, but we wanted to give you a heads up on what will be coming up and what we're working on. Also, Andrew Ibrahim, who is co-founder of Signature FX, will be providing information on cryptocurrencies. We don't know exactly what shape or form that will take. It will more than likely be in the form of videos and or podcasts, but those are all in the works. So we have a lot that we're working on for our listening audience and our viewers. So please make sure to provide any forwarding or sharing or any comments or suggestions with us, so that we can make sure to perfect our product as best as possible and to suit your needs as well. I'd like to end with a thoughtful quote, and this quote comes by way of Curtis Faith, and it goes like this: "Human emotion is both the source of opportunity in trading and the greatest challenge. Master it and you will succeed." Thank you so much for watching. Please stay tuned for future projects and future videos from all of us here at Signature FX. Thanks for watching, and you have a great, pleasant trading. Happy Thanksgiving again to all our American watchers and viewers and anybody who's celebrating Thanksgiving. We want to thank you for watching us, and we're thankful for you. We're really thankful for you. Hopefully you've noticed that we have been doing a lot by way of rebranding, providing you with top-notch service, and we will be following up on this gold video. Like we said, we see gold going higher. Right now, today, gold is $12.91. We're looking at a price of around $1,400 in the coming months. So stay tuned. Thank you for watching, and happy trading. Take care.